I'm Ganesh. Today I'm going to talk about gold as an investment in India. People often cite two main reasons to invest in gold. First, gold will only rise in value, or at least it will retain its purchasing power, unlike our current currency. Second, in India, gold has a cultural significance, so it's a good option to invest in gold. Before we dive into those two arguments, first let's talk about nature of gold as an investment. Gold is not income generating asset, unlike fixed deposits, and it plays very little role in industrial production, unlike steel. Then why would somebody invest in gold? Because they think someone else will come along and buy at higher price than what they paid. Why would that somebody buy it from them, especially when gold is neither income generating nor having any industrial utility? Because they think that someone else will exactly think like them. Isn't it how all bubbles are created? If you read about the history of money, you will see that for a long time, people used cowrie shells as currency to facilitate exchange of goods and services. And then people switched to precious metals like copper, silver and gold. After Second World War, all currencies in the world were pegged against US dollar, meaning there is a fixed exchange rate between two different currencies. And US dollar was on gold standard. What is gold standard? It means you can tender US dollars for a specified amount of gold and you can tender gold for a specified amount of US dollars. But after 1971, that relationship changed. Gold no longer has any fixed exchange value. Today, no currency in the world is on gold standard. Does it make sense to invest in cowrie shells? Because it was used as a form of currency in the past, just like gold. And it also has ornamental value, just like gold. Now let's get into the first argument. Gold will only rise in value, or at least it will retain its purchasing power over time. In 1975, a 24 karat 10 gram gold coin costed 540 rupees. 43 years later, in 2018, it reached 31.5k. It represents 2.5% of real returns. For 4% real returns, this amount should have been 60k. 2.5% real returns is nothing to scoff at. But here is the problem. Between 1981 to 2004, gold returned minus 3%. It means gold does not retain its purchasing power over 23 straight years. Urban Harvey, in their 2013 paper titled Golden Dilemma, looked at data to answer questions related to investing in gold. Their conclusion: gold does not retain its purchasing power over time reliably. Now let's look at data. If an investor has 10 years to invest, between 1975 to 2012, we have 27 overlapping 10-year periods. From 1975 to 85, 76 to 86, so on and so forth. Among the 27 time periods, nearly 60% of the time, gold returned negative real returns. Isn't it surprising? Now I hope it's clear that gold did not retain its purchasing power over a reasonable time period even in the past. Let's get into second argument. Gold plays significant role in our culture, doesn't it? But still it doesn't make gold as a good investment choice. Copper also plays significant role in our culture, but it's not as expensive as gold. I believe a big portion of gold price can be explained by the collective hangover from gold standard era. I think one day gold will also become like cowrie shells. Even if it doesn't happen in our lifetime, there is absolutely no reason to expect positive real returns or not even 0% real returns from gold. Buying gold as a gift is different from thinking of it as an investment. Just remember that every rupee spent on gold is a rupee not invested elsewhere.